has to make money because throughout the term of the hold, we don't make a dime. And I think that that's a huge advantage for what we're doing. I don't think there's any other funds out there that do that. So on Bigger Pockets the other day, there was a guy that popped in there and asked, what do you guys look for in terms of syndicates or syndications? What are your qualifications if you'd like to invest in one of those things?
And he just posted generically on Bigger Pockets, not like sending it to you directly.
No. He was asking like he was in, I can't remember what forum it was technically, but he was asking in one of the forums. So I popped in there and I was like, okay, well, this is what I would look for in terms of a syndication. Then I started thinking like, well, why don't I just answer all of the things that we put together in ours in order to justify me myself if I were to invest? Mm-hmm. Because that's basically what we did. It was a combination of, because for me, well, what would it take for you to want to invest, Dan? And then if this is what it would require for you to invest, people are being sold on my qualifications and my needs and necessities. So in my checklist. So let's just create a fund, however structured, to make it advantageous for me to want to do it. Mm-hmm. So I went in there and I was like, hey, listen, you need to look for, obviously, if there's some sort of proven track record. And although we don't have a lengthy proven track record of a successful fund, I have a proven track record of operating, a fairly decent sized portfolio personally, mm-hmm. right? So there's that. I have a proven track record of owning and operating successful businesses for the, over 15, not over, but, about 15 years and definitely the better part of a decade. And then I feel like performance-based is another big proponent of, mm-hmm. Figuring out if you'd like to invest in a syndication, because it's very easy to get into a syndicate where there's tons of fees for the fund managers, right? That's a very, common type of fund. But for us, we don't make any money until the fund produces a gain at the end. So you better believe we're doing everything in our power for that fund to make as much money as possible. Because if it doesn't, mm-hmm. and there's no gain, or the gain is minimal, for call it, the 3 to 5 years that we're holding these properties, we don't make a fucking thing. So it has to make money because throughout the term of the hold, we don't make a dime. And I think that that's a huge advantage for what we're doing. I don't think there's any other funds out there that do that. I mean, hey, listen, somebody hit me up in the comments below if there are. We'd love to know. Mm-hmm. But I feel like we're the only ones that offer something like that. And that was pretty much it. I think one of the biggest ones as well is, and I remember seeing this, this was direction from someone else that I read. I can't remember where this was from, but I remember reading this or listening to it or something like that, where a very successful fund was, giving off their recommendations for what they should or what someone should ask or look for in a fund. And one of them was a successful track record in business, not necessarily in real estate only. And the reason why is, what do I always preach? Operate your real estate like a business, exactly. And it will operate better. Mm-hmm. If you operate your real estate like an investment, you're not going to have as tight qualifications for your stuff. You're not going to have, as tight, financial requirements for your portfolio. In the end, it's a business. It's something you offer, a service or a product, real estate being the service and the product essentially. And you offer that to customers, tenants, mm-hmm. for money in exchange. It's a business. So it has to operate like a business. It's not an investment. You can call it a real estate investment, but it's not. It's a business. So I feel like those are such those high level qualifications are exactly why we operate the fund the way that we do. And then also something else that I wanted to introduce was exit strategies for those that say, there's something that they want to, there's a means of exiting the fund. very similar to if they were investing in single family homes, which is the most common form of real estate investing. So those are things where essentially you can divest your investment. You could sell it to somebody that that obviously would have to be qualified by us, or you could broker us to sell your investment for you, right? For a small fee, like a real estate agent, same thing. So the combination of all of those things make it very difficult, I feel, for someone to replicate what we're doing. And that's the name of the game here is when you're in business, you want to put things... You want to create your business in such a way that makes it extremely difficult for someone else to come in and replicate. You want to make sure that there's barriers. You want to make sure that there's so many things that make your business or your product offering or service or whatever so difficult to replicate and impossible, where or the offering is too good to be true or too good for you to say no to. And I feel like we've done a really good job of that. And the fact that someone would have to literally come in, and the way that we're doing this, people might be like, well, how are you able to offer what you're offering without taking any money from it for a long period of time? Well, the reason why I'm doing that is because I'm leveraging our existing businesses to be able to do it in the existing departments, and you and Dave and the marketing department and the graphics and accounting and all of that stuff. I'm leveraging the business. So I'm paying for all of these expenses through another business, right? And I know that the funds are going to perform, so I'll eventually get my expenses paid back to me, or I'll eventually get paid back. But I'm okay waiting, and the reason why I'm okay waiting is because I have the bigger picture in mind. I understand that there's power in numbers, and in order to get there, at least in the beginning, I have to make this offer so good that it's impossible to refuse in order to get to, say, for example, our goal of $1 billion. Once we get to a certain point, then maybe there will be fees. I don't know. So for those that are listening or watching, it might be good. It might be advantageous to get in now, because these returns, they're not typical of a regular fund. They're higher, typically, that we're doing or that we're offering. So the reason why they're higher is because we're not siphoning off, fees and expenses out of the fund that will drive down the returns. So, if there's anybody that's going to take anything away from this in terms of business, make your business very difficult to replicate. Put up a lot of barriers. Eat shit for years. Don't expect to, make a bunch of money right off the hop. Sacrifice for a little bit, which is, in this particular fund, like what I said, what we're doing, we're not making any money in during the whole period, and then make the offer so good that it's difficult to refuse.